Hey, good morning. Welcome to the mortgage rate forecast with Scott Criss, your mortgage rates and news. It's January 18th, and let's get started with the charts. Here's what we got, guys. Pretty steep downward trading channel that we're in at this point. Today, bonds are pushing at 101.66. Our support's coming in. I can't even put it on the chart. I'm sorry, but it's like below where the chart goes. So support's coming in about 101.30. And below that, our next line of support is about 101 even. So we're definitely in a downward trading channel, guys. If you've had your mortgage options to lock in, hopefully you've locked in. If you haven't, it's not looking so great right now. I mean, we got resistance above us at 101.70 now, 102. We had a really hard time trying to break 102 recently. So as you can see my mouse here. So yeah, it's just not looking that great for bonds. Jobless claims came in better than expected, way better than expected, but there were a lot of estimates on the job claims rather than actual numbers, just because of the weather, the storm, so on and so forth. Building permits are down a little bit. That's a little bit helpful for bonds, but still, housing starts are looking great. Philly Fed's looking great. So on top of that, the Dow has been setting records, and you probably have heard of that here this week. So Dow's doing well, and the Fed is just continuing to do their quantitative easing, purchasing less and less mortgage-backed securities. We're even starting to see a lot of foreign investors who generally love the mortgage-backed securities really kind of backing off from their purchasing. So mortgage-backed securities are definitely facing a little bit of pressure. So to kind of quantify where we're at, Freddie Mac reported, and the website is down below. The average consumer received an interest rate of 3.95 and paid half a point, and that's in December of 17. That's when trading was averaging, let's just say, right around 102.70. We're now at 101.66. That's over $1 lower. So if the average consumer is paying maybe half a point to get that, they may be paying over a point and a half to get something like that. So that's really where we're at. Let's get into the forecast. Last projection was a hit. I know I'm sounding like all doom and gloom lately, but it is the direction that bonds seem to be going. Um, Investors are still pretty consistent. They're really kind of bearish on both short-term and long-term for mortgage-backed securities. So here's what I got. I think bonds are probably going to be trading between 101.30 and 101.70. Now keep in mind this morning we're at 101.66. So that means if I'm right again, that's only 4 cents better from where our current trading is, but up to 36 cents worse than where we're currently trading. So I feel there's not enough potential news coming out that's going to help bonds, and I think we're going to be continuing to be pressuring lower, and I think we definitely have more room to get worse than we do to get better. So I mean, if you're in a position right now where you can consider locking in your loan, it's worth looking at for sure. Anyway, that's it for this week. We'd love to hear from you. Leave your comments down below. Everybody likes to be liked, so does this video. You know what to do. And if it's your first time on the channel, that guy on the left, click on him. That will get you subscribed. I'll just give you a quick little update, little push notification when we release new content, which is generally weekly. And if none of this made sense to you, Mortgage Bonds 101 is a link at the top right. That'll just teach you the basics that you need to know as a consumer when you're trying to pick the best time to lock in your interest rate. Okay, that's it for this week. We'll see you next Thursday. Take care, guys. Oh, I will not see you next Thursday. I'm on vacation. I will see you in 2 Thursdays. So we'll talk to you soon, guys. Have a great day. Bye-bye.